Hello and welcome to another daily recap. I am Sam Morton. Today is Friday, April 12, 2024, 8:25 a.m. Eastern. Here are levels that have been identified to trade against in the E-minis. You'll notice one of them is dashed. This is because it's a midpoint between two other important levels. You may recall that yesterday there was a pretty big fumble at 5:1648 to be exact. A level that came out of the calculator this morning was below, so this is right in the middle. And at 8 o'clock on their obligatory little shimmy, the spiders they were at the flat line right around where they're at now, 5:1630, 34. They shot up, they shot back down, kind of ended on the baseline, but this was the an important area during that pre-market little shimmy, and I suspect it will be important during the day. Now, there's nothing that I see at 8:30, any kind of date of announcement that might affect the market, but at 10 o'clock there could be something that could move the market a little, just to be aware of. After the market closes, we will circle back around and analyze all the trades taken in the E-minis based off of these levels. See you then. And here we are at the end of the day, and just take a look at where price went. It kind of went off the screen, just leaving this here for you to see because it's in the same position where it was from this morning. But I'll just move this up so we can kind of zoom in and look at the relevant levels. So the first trade here, I want to point out that I have these two other lines. Remember I mentioned this morning that 5:1608 was a bid point between that fumble from yesterday and a calculated level from this morning. That's where it was. Well, they came up into 5:1568, the actual level. And I apologize to those who received the levels this morning. I didn't actually give this level exactly. I did tell you that 5:1608 was a midpoint. In fact, why don't we just take a look at the email that I sent out this morning? So here's the email from this morning to the pre-subscribers at the levels. This was at 8:43 a.m. And I did say that you'll notice that 5:1608 is a dashed line. It's a midpoint between two other levels. Excuse me. Right above is the 5:1648, which was where the fumble happened yesterday. And below here in this paragraph is another level that is formula derived. So you could deduce what that number was. That's where I would have sold, but I guess back to the chart, because I actually didn't take a trade there. It would have worked greatly, but I was actually away from my computer, a little bit of a family emergency. As I mentioned, so pretty much right when the market opened, I had to run out. So I was actually on the road up until about 10 o'clock, had to run out to get something for my daughter. But anyway, so when I came back, this had already happened. They were on their way down. It's a little bit after 10 o'clock. So I missed this trade. It would have worked pretty well, playing by the rules, because this was a area to start selling all the way up to this area here. This was just the midpoint that I put out this morning. But I was able to get this trade. I wasn't recording anything at this time. It took a little bit of patience. They were below the fumble threshold for a while, but nothing was triggered to call this a fumble. And they came back above, triggered this. There was a base hit here, a base hit at 5:1058, and bounced up just enough. The first time that worked, they came up higher a couple more times, but this level provided support, and I identified a level below, and this really kind of where was the money trade for me. I was able to trail it up for more. And let's just take a look at it, because I started recording. Actually, I was in the trade and started recording at this point, thinking, well, hey, I want to share this because it could look kind of impressive. So just to set the stage before I start rolling the recording here. So I had already satisfied the other levels on the way down, this 5:1065. So I identified this zone here. So I bought a contract at 5:0990, bought another one at 5:0944. It turned out to be the low, and nailed it pretty good. So I had an average entry point in between these two, as you can see. So I'd already taken a base hit of about 6 points off, and I was trailing the other. So the reason I had this other target up here, I'll just start playing this. So I'm in the middle of the trade at this point. I'd already taken one off, and I'm trailing the other, because I thought, well, the bulls probably had enough juice to fight back that precipice line, which is around 513. So that's where that was. And I adjusted this a couple other times down, because I started paying attention how they're behaving, looking at other charts. And so I ended up moving it down here. I thought it'd be kind of nice to, just grab a portion of this move here. I end up closing the trade out. It was exactly 10 points when I want to get what I gained, pull out some profit from what I'd already trailed up here without them going too lower. But when we came back down a couple times, I thought, well, just in case the bears have more strength than I anticipate, I'll just jump out. So I jumped out somewhere around here. You'll just see everything disappear right there. That was when the trade was closed out. So that was actually 10 points. So that trade was pretty good, considering that I had two contracts here. This was a pretty important area. And I kind of expected them to come up and defend this 513 area. This is kind of an important area, kind of the line in the sand, sort of this precipice we've been talking about. But they closed well below that at the end of the day, as we'll see one more time here on the entire day. So, and I just added this other level here. So all these levels had been satisfied at this point, and 509.67 was just the midpoint, the average of my, when I bought up here and I bought down here, and that was my average. And it doesn't look like a lot here, but I did get 10 points on this run on the way back down. I jumped back out. So I thought what they were going to do, and if they did come all the way up to 513, like the bulls would probably want to close above that level, because it's kind of a shot across the bow if they're below it, and they are below it now. On this weekly close, definitely below 515, 515.80, 515.50, whatever that number was that we looked at a couple weeks ago on the weekly chart, which isn't as relevant at this point anymore. We're in the month of April, and that on kind of like the timing is right for it to pull back, and maybe that's what they're starting to do. But anyway, so I was able to grab several points today, quite a bit. I just kind of, unfortunately, I missed that first trade, but I just wasn't at my computer. It is what it is. Playing by the rules, and if you understood that this first level at 516.08 was the middle of a little zone that you could have sold going into it, and you would have got it on that first and never even got into the second part of that position. But at least, a contract or two at that position was my plan. And that would have been the first base hit. The other two were pretty straightforward. If you were playing by the rules, you would have just got 3 base hits for 12 points. You saw what I did. I missed the 516.08, but I did get the other two, and then my additional level that I identified in real time, I was able to get a 6-point base hit on that and trailed it up 10 points. I just jumped out as they were on the way down. So 24 points for me. So not a bad day to end the week. Pretty interesting times we're in, but it's not too surprising that they have met some kind of resistance, and they're possibly starting a correction at this point, but it all remains to be seen. Anyway, hope you found this interesting and perhaps learned something today. Thank you for watching. Consider subscribing. Have a great weekend.